Hello and welcome to another update video about Natgas. We haven't covered it for a while. I was so busy doing other stuff, but overall this wave count that we discussed in the previous video has pretty much unfolded nicely, and actually it's maxed out what it should do. Okay, quick reminder, what did we talk about? We talked about wave 1 to the downside. Then we saw an A-B structure, and based on the microstructure, my assumption was that this could subdivide quite high, possibly even towards that sort of $2.84 level, the 78.6 retracement, and this white target zone, which is defined based on the initial 1-2 setup here. And the area is located between $2.58 and $3.02, and we are now there. Okay, so we have arrived at the, you could say, at the destination, but it's pretty much maxed out what it should do in this corrective rally of an A, B, C structure. Again, I'm not confident about the microstructure here, but it is possible A, B, C structure and wave 2 could be complete. But without a move down now that would break support, there is no sign that this wave 2 is complete. But it can't move up much higher. Well, it can, but then it would not be this wave count anymore. So I want to talk to you about the different scenarios. It's always important to be up to date, especially whenever we reach a key pivot. And why is this a key pivot? Because the wave 4, or let's say not the wave 4, but this move down might be invalidated here shortly, right? So if the price pushes much higher, then the idea here of this 1-2 setup to the downside, one second, of this 1-2 setup to the downside could be invalidated, could change. In previous videos, we also talked about the concept or the idea of an Elliott wave triangle. This is of course something that is possible, and maybe we should start with that. So bigger picture, overall idea is wave 3 bottomed here. I see this here as a corrective rally. So the assumption was that this is maybe a wave 4. And we also saw a 5-wave move down. Now the idea of a triangle, I'm not in favor of it, because the move down that happened actually looks more like a 5-wave move. But it is still, that's kind of an interpretation thing. Maybe we are dealing here with an A wave, a B wave, a C wave, a D wave, and an E wave, and then we go down, and the wave 4 would sit here. So this would be, let's say, a reasonable alternative. So it would be like wave 4, instead of sitting here, it could sit here, but as an Elliott wave triangle. Now the trend lines are not so important, and I will highlight them in yellow, but it is, it still, it gives an idea of what we're looking for. Okay, that would be, let's say, just a sideways range scenario where the price could just move sideways for a little longer before we go down. The white wave count has now arrived at a key inflection point, so it can't really move much higher. I can remove the resistance area from the chart. We're above key resistance, but not above the invalidation point. So the invalidation point for wave 2 as a corrective rally is here around $3.15. Now the question is, what would we go with if the price goes above it? So I still don't like the idea that this is something more bullish, just due to this unclear bottoming structure, due to the fact that this is a corrective rally. Also, this looks like a corrective rally, but I mean, if we have to consider that a substantial low formed here in February, then I would have to see this as a 1-2 setup, okay? Do I like the idea? No, but once we see a pullback, we can add a support area for it. But I can tell you that this scenario would become much more likely if there is a break above $3.16, so above the June high. So that takes us to the micro levels here. So when would we say that, when would I say that we have actually topped here in this wave 2? It's tricky talking about this wave 2. The simplest way to deal with it is just to draw the fibs and say, okay, below the 50% fib level, I assume wave 2 is top, but it's far away, right? So the nearest level really, for a top to be in place is at 272, the last swing low. Better indication would be a break below 252, and Fibonacci support is at between 265 in 235, but ideally already, you know, especially with the second low here, if we break below it, I would have to assume wave 2 is topped. But ideally we get some kind of a 5-wave move down, 3-wave corrective rally. Either way, that should give you key levels to watch, especially now that we've arrived here at the key pivot. Bit of a breakout point there, but the rally, it is now already, it's rallied a lot. If we take a look at the relative strength index, it's now overbought. It's now overbought as opposed to, you know, oversold, which it was sort of in July, which is when we started to look for this wave 2 corrective rally, which then even extended a bit further. Even possibly here some bearish divergences visible on the 4-hour time frame as well, right? So I think, you know, we're getting to the end of this rally, and the question is, do the bears turn up before we get an invalidation for the white wave count? This is what I'm watching for. So the levels should be clear. At the moment, I can tell you there is no sign that a top has formed, so it might still give us 1 or 2 more highs, but we've now arrived, as I said, at this previous swing high and the trend line. So I'm watching for a reaction. That's the update about Natgas. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.